Welcome to the annual meeting of your San Diego City Employees Retirement System. We manage the pension plans for the City of San Diego, the San Diego County Regional Airport Authority, and the Port District of San Diego. We present this status update to demonstrate how we are keeping our pension promises to you. Our investment program is solid and secure for the long term. Our board governance model is a leader in pension reform and best practices, and we promise to provide excellent customer service to you. You, our members, are part of this responsibility to maintain a solid pension system. We are presenting very serious information today about your financial future. We want you to be engaged, and we want you to feel that it was worth it to come down here and spend your time here on a sunny day. So, we shall engage you with pension trivia and candy prizes. Be ready. I would like to introduce our expert team here today. We have Liza Krisafi, our Chief Investment Officer, Anders Norman, Senior Investment Officer and Head of Public Markets, Jamie Hamrick, Senior Investment Officer and Head of Private Markets, Marcel Voorhees-Rossmann, our Deputy CEO, Greg Rodemaker, our Chief Executive Officer, and over here running the show, we have Jessica Maloney, our Communications Manager. This presentation is being videotaped and will be available for you to access later online. We've prepared a comprehensive program to share the key information that affects you. Our staff will be here after the presentation, and we'd be happy to talk with you, answer any questions that you have. If you have a question about your personal retirement account, please call our office so that we can look in our computer system, access your confidential information, and provide you with the correct info. Is anyone here in the audience a member of a retiree association, such as the Retired Employees Association? Yes, excellent. We have Shirley Hall, one of our board members here. There's also the Retired Fire and Police Association. We have Mary Bush over here, who's not retired fire and police, but longtime participator in the Retired Employees Association. There is also an Ask Me Local 27 Retiree Association. All of these groups, I encourage you to learn about them. They do great work staying on top of the important issues that affect your pension, and they absolutely provide input to SDCERS. This definitely helps us continue to provide excellent customer service to you, so definitely check them out. During this presentation, you'll hear more about the good work of our 13-member Board of Administration. As you know, 7 members of the board are not members of the pension system, as you are. Rather, they are independent experts from the community who must meet high standards to even qualify to be on the board. If they meet those high standards and have enough experience, they then must agree to work for free, disclose all of their personal financial investments to comply with conflict of interest laws. They must pass the public appointment process with the City Council and the Mayor, and they must pledge allegiance to the SDCERS Trust Fund. It's a very big commitment. We're pleased to have with us today our Board Vice President, Karina Coleman. As Karina prepares to come up, I will share that Karina is an accomplished investment manager with Sempra Energy. She has extensive experience managing assets, negotiating investment management agreements, and analyzing risk and performance. Previously, Karina was a corporate treasury manager with the Disney Company. Thank you so much for being here today, Karina.
Thank you. Thank you, Cynthia, and good morning, everyone. As Cynthia said, I am the newly appointed Vice President of SDCERS Board, and I feel very honored to be associated with this organization. I'd like to welcome all of you on behalf of the rest of the SDCERS Board, and thank you for coming. The board and SDCERS staff works hard to manage and administer your pension benefits, and the fact that you all showed up here this morning means a lot to us because it shows that you genuinely care about what we do here at SDCERS with respect to managing your benefits. Your attendance here today also serves as a reminder of just how important our work is. When you're working with numbers all day long, you can sometimes lose sight of the fact that what you do actually impacts impacts the lives of others. And indeed, SDCERS has nearly 20,000 active, retired, and deferred members. And our job is to ensure that the plan remains healthy. SDCERS is committed to each and every one of you, and that is why we take the time to have an annual meeting. The theme of this year's meeting is keeping our promises so that you can keep yours. We all make promises, and all promises incur an obligation of some sort. In fact, every Board of Administration member is required to take an oath to perform his or her duties solely in the interest of the members and their beneficiaries, and for the exclusive purpose of providing benefits and defraying reasonable expenses incurred in performing those duties. SDCERS promises include paying you the pension benefits you are owed and paying them on time. And if we do our part, then you can keep your promises that you've made both to yourself and to the loved ones around you. You are about to hear from SDCERS staff members today whose primary goal is to ensure you that your benefits are secure and will be for years to come. SDCERS' mission is to ensure the safety, integrity, and growth of the trust fund. Over the next hour, you will see a lot of numbers and financial data, and you will hear SDCERS executive staff tell you about their achievements over the past year. And as you are taking in all of this information, I just want to make sure one thing is clear. We are all here for you. This is your meeting. And before I hand the mic over to Cynthia, I want to say again, on behalf of SDCERS board, welcome, and it's wonderful to see so many of you today. Thank you.
Thank you so much, Karina. We appreciate your service to our community, to our board, and to all of our members. I would now like to introduce to you Liza Krisafi, our Chief Investment Officer and head of SDCERS award-winning investments program.
Good morning. This morning, I am going to cover investment performance for the fiscal year ending June 30th, 2019. And then you're going to hear from Anders Norman, who is a senior investment officer and head of public markets, which basically means stocks and bonds. And then you're going to hear from Jamie Hamrick, who's also a senior investment officer, and she's head of private markets, which include private equity, infrastructure, and real estate. And they're going to be discussing some specific actions that the investment team has taken over the past few years to reduce risk in the portfolio. And then we also have a fourth member of our investment team, Dimitrios Haldis, who's an assistant investment officer, and he does a little bit of everything, and then covers some of the opportunistic investments in the portfolio. So the first chart shows performance for the year. The return was 7%. It was a little bit below the benchmark, which I will cover in a little bit. For the year, that return of 7% put SDCERS in the top 19th percentile, which means we did better than 81% of our peers. And you see some of the longer-term numbers. 3 years still looks very strong. The 5-year number looks a little bit low, but that's because we had 2 years of lower returns. In 2015, the return was impacted by the Greek debt crisis, and in 2016 was impacted by Brexit. However, since inception, the return of 8.9% puts SDCERS in the top 1%, let me repeat that, top 1% compared to a peer universe of over 300 public funds. So what were the highlights for the year? Well, first of all, the strongest performing asset class was private equity, where we have a 10% allocation. And the return for our private equity was 10.4% compared to 15.7% for the index. Now let me explain that. The return basically lagged the benchmark because we were underweight 2 sectors in private equity. The first one was buyouts, where we had a 49% allocation versus the benchmark at 59%. And buyouts refers to where a management team or a firm acquires or buys another business with the intent to take that business private, and that includes buying all the outstanding shares. And the rationale for that is that they think it's an underperforming company and that they can turn around, and over the long haul, then they will bring it back to the public and issue shares somewhere down the line and make a profit turning that company around. In the last few years, there have been a lot of dollars looking for investments in that sector. So that has driven prices higher, but it's also led to more risk. The second area where we underperformed was venture capital. That is the riskiest area of private markets, private equity. We had an 8% allocation versus 14%. Venture capital is another sector of private equity, and that's basically where you're investing in brand new businesses that are experiencing very fast growth. Of course, that means higher risk, but the potential for higher returns. And you could be investing in things like brand new technologies or biotech companies. Keep in mind, though, this is a one-year return. Investing in private equity, when you make an investment, that's usually about a 10-year time commitment. So the more important return that we use and our advisors use to evaluate the performance of the sector is the internal rate of return since inception, and that return has been 16.2%. The second best performing asset class was U.S. stocks, where we have a 21% allocation. U.S. stocks were up 8.7% during the year as the Federal Reserve backed off raising short-term interest rates, and that was a positive for the market. In December of last year, the range for short-term interest rates was 2.25% to 2.5%. And so far in 2019, they have lowered interest rates 2 times, and they may lower them again later this month, depending on global growth. And that's been a positive for the markets. And then emerging market bonds, where we have a 5% allocation, rebounded up 9% for the year, and that's compared to earning about 4.5% each year during the last 3 years. Economic fundamentals improved in many of those countries during the year, and emerging market central banks in many of those countries, including China, India, Indonesia, and Brazil, also eased interest rates, which helped those economies. So in summary, the performance was slightly under the benchmark, but beat the actuarial assumed rate of return of 6.5%. So the next slide shows your long-term asset allocation. And why is this important? Because this mix of assets is the key driver of your return. And you can see on the right side of the slide, and it doesn't have the numbers, but in the return-seeking area, we have 78% and then 22% in risk-reducing assets. And it also shows the role of each asset class in the portfolio. We review this with the board and the consultant on an annual basis. And we look at long-term return expectations for each asset class. The current long-term expected return for the whole portfolio is 6.9%. We also look at things like, do we have inflation protection in the portfolio? And that would come from being invested in stocks, real estate, and infrastructure. We look, is the portfolio diversified? Do we have assets that provide downside protection? That would be our conservative U.S. bonds at 22%. And then we also look at liquidity needs. How much cash flow goes out to pay benefits compared to how much income we are generating? And finally, one of the key areas we look at are costs. What kind of fees are we paying, and how can we bring those costs down? One of the key reasons that we added index funds over the last number of years was because they generate returns just like the market, but at much lower fees. And that has saved us millions of dollars in fees every single year. And then the last slide looks at return and risk. And we are always looking at risk in the portfolio. And this chart shows you the expected returns on the left side, which is the vertical axis, and risk or standard deviation on the horizontal or on the bottom axis. As you can see, a 90-day U.S. Treasury bill has very low risk, but it also has very low return. The riskiest asset class is private equity, which is followed by U.S. and non-U.S. stocks. With our mix of 78% return seeking versus 22% risk mitigating, you can see on that, that's the blue triangle. And that's a mix of a global stock index and an international bond index. SDCERS return is in the blue box. And what you can see is that we are getting a higher return with lower risk than the plain mix of 78-22%. Why is that? Because we are more diversified, and we are using more asset classes to offset some of that equity risk, but also to generate return. And it's really a balancing act, and very important that we look at this every year. So that concludes my remarks, and I'm now going to turn it over to Anders Norman, who is our Senior Investment Officer and Head of Public Markets. Thank you.
Thank you, Liza. Good morning, everyone. Before we start talking about the improvements that we've made to SDCERS's public markets portion of the portfolio over the last year, it may be helpful with a quick recap of what public markets is. So 76% of the assets in SDCERS's total portfolio consists of public markets. So public markets are, as Liza mentioned earlier, pretty much stocks and bonds that trade on an exchange, and these markets are characterized by a high level of liquidity, which means that you can buy and sell these assets on a daily basis. Another thing that characterizes these markets are a high degree of efficiency, which means that the more efficient a market is, the faster new information gets reflected in the price of these assets. Sorry, that was my slide. So now that we know a little bit what public markets is, let's talk about our efforts to reduce risk in the portfolio in public markets section over the last year. Over the past year, we introduced 2 changes to the public markets portion, which were meant to reduce risk in the portfolio. The first one was to increase our exposure to global stocks by 3% by reducing our exposure to US stocks by the same amount. This was done to eliminate SDCERS's home country bias. Home country bias refers to a strong preference to own domestic stocks. So by having more exposure to the US, we implicitly make a bet that the US will consistently outperform the global stock market. And as we all know, over the long run, it is extremely difficult to consistently pick the right region or country to invest in. So there's no real advantage to having an intentional bias to a certain region or country. In fact, a global diversified stock portfolio tends to be better positioned to weather larger swings in the market and provide more stable returns, thereby reducing the risk in the fund by diversifying across countries. Not only do we decrease risk by diversifying across country, we also increase the return potential in the portfolio by allowing the investment managers to select the best stocks regardless of domicile or country of domicile. As with any other investment portfolio, as you know, stocks tend to be the largest driver of return, and therefore it's only natural that it's also the largest source of risk. So the second change we made to increase diversification was to add a allocation to what's called managed futures. And we did this to protect the gains that we have achieved in the portfolio since 2009. Now, you might wonder what managed futures is. That is a trend-following strategy that invests in stocks, bonds, currencies, and commodities. And the main goal of managed futures is to provide positive returns in both up and down markets. As you can see on this chart, represented by the blue bars, traditional stock and bond portfolio, when that does poorly, managed futures, represented by the green bars, tends to do really well and have positive returns. So we can thereby reduce the negative effects that stocks have on the portfolio in a down market by adding managed futures to the portfolio. A minute ago, Liza was talking about risk and return in the portfolio. As we look for ways to reduce risk in the portfolio, like the two examples I mentioned just now, it is important to analyze the relationship between risk and return in the portfolio. The risk-return relationship can be measured by what we refer to as the Sharpe ratio. The higher the Sharpe ratio, the better returns you are generating for the level of risk you're taking. So since this ratio is pretty much useless unless you compare it to a group of peers, we compare it to a group of other public pension plans, like Liza mentioned, we compare our annual returns to. And as you can see on the left chart there, it's a little bit small, but SDCERS is at the top of the range, and it's in fact better compensated for the risk in the portfolio than 95% of the other public pension plans we measure ourselves against over the last 3 and 5-year time periods, and better than 83% of peers over the last 10 years. Part of this has to do with the fact that the risk level in the portfolio has come down substantially over the last 10 years, as you can see in the 3 pillars on the far right. Might be a little bit difficult to see, but if you see the little dots there, they're trending downwards, which basically means that the risk has been coming down. So to conclude, the 2 steps that we've taken in the public markets portion of the portfolio by board and staff should help protect the gains that we have achieved since the last recession, by diversifying the stock portfolio and reducing risk in the overall portfolio. And with that, that concludes my remarks, and I would like to introduce Jamie Hamrick, who's our Senior Investment Officer and Head of Private Markets at SDCERS.
Good morning. SDCERS private markets portfolio comprises 24% of the total portfolio. When we say private markets, we're referring to real estate, private equity, and infrastructure. The real estate allocation is 11% of the total portfolio and includes investments in commercial real estate across the 4 property types. The 4 property types are retail, office, industrial, and apartments. Private equity and infrastructure allocation is 13% of the total portfolio. Private equity includes investments in private companies that are not publicly traded. Infrastructure includes investments in facilities or structures that are necessary for an economy to function. Some examples of infrastructure investments are bridges, toll roads, and airports. Liza mentioned earlier that the board and staff have taken steps to reduce risk in the portfolio. This slide is showing how we have reduced risk in the real estate portfolio. In 2016, the board approved the plan to liquidate SDCERS directly owned properties. There were a few reasons for this. First, one manager comprised 56% of the real estate portfolio. This is shown as the green piece of the pie chart on the left. Secondly, SDCERS held 19 properties. While these properties were diversified among the 4 property types, they left SDCERS with a higher degree of risk if one of those properties began to underperform. And finally, due to the size of the real estate portfolio, SDCERS was investing in smaller properties. These are properties within the $10 to $25 million range. These tend to be a little more volatile. This can be contrasted with a property in one of our fund investments that can be worth hundreds of millions of dollars. Since 2016, the investment manager that managed these assets has sold 15 of those properties. The remaining 4 properties will be sold over the next 2 years. The benefits that SDCERS will realize from these changes are a more diversified portfolio in terms of exposure to the number of properties. The green section of the chart on the left had exposure to 19 properties through one investment manager. In the dark blue section of the chart on the right, SDCERS now has exposure to hundreds of properties through multiple investment managers. The portfolio will also have access to larger, more stable properties. An example of this is an apartment building. A separately owned apartment building that was held in our portfolio had less than 100 units in it, while an apartment building in one of our fund investments actually may not be an apartment building, but may be an apartment complex made up of several buildings with hundreds of units in it. And finally, the real estate portfolio now provides more stable market-like returns. The purpose of private equity and infrastructure within SDCERS portfolio is 1, to increase the risk-adjusted returns of the overall portfolio, and 2, to increase the diversification of the total portfolio. SDCERS invests with 2 private markets advisors in 2 separate fund investments. Since the inception of the program in 2009, SDCERS has sought to design portfolios that are completely opportunistic. And what does that mean? This means that each advisor is focused on finding the best investments for the portfolio. This is determined by taking into account the expected return for the investments and the fit of the investment in the portfolio. By this design, risk reduction is built into the process as we ensure that the portfolio is well diversified. The 4 donut charts on this page show that SDCERS portfolio is well diversified in terms of investment type, fund strategy, industry, and vintage year. No one color dominates each chart. SDCERS will continue to employ this opportunistic investment approach in a consistent manner as it has since the inception of the program. Now I'd like to turn it back over to Cynthia. Thank you.
All right, are you ready? Are you ready? All right, our first pension trivia question. Paying attention? What was SDCERS' final investment return for fiscal year 2019? You get a prize. It's 7%. That is close. Did anybody else say it and I just didn't happen to hear them? Over here. Some candy over here, I believe. Excellent. Next trivia question. What 2 asset classes make up public markets? Stocks and bonds. Stocks and bonds, yes, I heard a couple people say it. Thank you, excellent helpers. Yes, stocks and bonds. Now this one I know you'll get. What are 2 of the 4 real estate property types? Apartments. Yes, I heard it over here, just a little louder. Apartments, yep. Infrastructure. Industrial. And office space, yes. Excellent. Don't be cheated out of your candy. I know a lot of people were answering. Excellent. Thank you so much, and thanks to our wonderful helpers here. Now, I would like to introduce to you our next speaker, Marcel Voorhees Rossman, our Deputy CEO.
Good morning. Good to see all of you here today. So our investment team just talked about how they kept their promise to responsibly invest your funds. I want to talk about 3 more promises that we make to you: paying you benefits, protecting your data, and making sure that the trust is fully funded. So let's talk about benefit promises. I know one of the reasons you all come, you want to hear about 13th check. I already have people cheering. I haven't even told you yet. So staff will be recommending at our November 8th board meeting that the Board of Trustees authorize payment of 13th check this year. So that means any retirees who are also eligible for the corporate payment will also see that in their November check. I've also had some questions about the cost of living adjustment and what that's looking like. Remember, the cost of living adjustment doesn't happen until July 1st of 2020. It's based on looking at the difference of the CPI, the Consumer Price Index, for all urban consumers from January to January. So we look at January to January, bring it to our board in May, pay it to you in July. Right now we know from January of 19 through August of 19, it's gone up about 1.5%. So if it continues to trend that way, we would be paying the full 2% COLA come next July. But we got to wait and see what it actually does through the end of this year. The last thing I want to talk to you about is paying you faster. We made a commitment several years ago to get our retirees their first retirement check quicker. And our goal was that all retirees get their first retirement check within 30 days of getting their last paycheck from their plan sponsor. So for the fiscal year that ended June 30, 2019, so July 1 of 18 through June 30, 19, we had about 400 members who either service retired or exited DROP. I'm happy to say 96% got their first check within 30 days. And actually, the average was 2 weeks. So you finish working, you get your final check from your plan sponsor, and 2 weeks later, you're going to get your first retirement check from SDCERS. So very proud of my staff for getting that time moved up. The next thing I want to talk about is our data protection promises. 2 years ago, I stood up here and told you what we're doing to protect your data. At that time, CUMA had just completed their security and privacy risk assessment, and we knew that we had basically good results from that. They did have one major recommendation, which was to establish a privacy program. So our associate counsel, Susan Youngfish, was named our privacy officer, and then she went and got her Certified Information Privacy Manager designation to go ahead and get this program set up. And I want to read to you what the objective is of this program. It's to implement a best practice data protection and quality privacy program by providing policies, procedures, and information integrated with a robust security program to protect the privacy of the SDCERS Trust Fund participants and employees. What a mouthful. So let's look at what does that really mean. So when we talked about data security, we're really talking about information technology securing your data. So that's things that happen when you call into our call center. We ask you security questions. We want to make sure we're giving the information to the correct person. When you go to set up your account on the member portal, we're asking you security questions again to make sure that we're giving access to the correct people. We changed our policy on emails, and there are only certain types of attachments we allow to come in on emails to us. We want to make sure a virus isn't sneaking in with someone's email. And then we have very robust firewalls. We actually have the Office of Homeland Security does a monthly scan of our system, and we do periodic penetration testing. And I'm happy to say that both those tests have not been able to break through our firewall. So that's how our IT is securing your data. Data privacy is a little bit different. It's looking at the use and governance of your personally identifiable information. So what is that? It's your date of birth. It's your social security number. It's your address. It's who your beneficiaries are. It's all of the personal information we have about you and your beneficiaries. Why do we collect that data? When you first get hired, we need to identify who you are. We want to make sure that you're making proper contributions. And then when you're ready to retire, we want to pay you the correct benefit. And we need that information to be able to do that. So when are we collecting this information? We're collecting it through your entire life cycle. So again, when you get hired, we need to know your date of birth, your social security number, your address. We need to know where you work, so we make sure we put you in the right plan. And then through your career, we're not asking you for a lot of information. When you get ready to retire, we need more information. We may need a copy of your marriage certificate. We need to know who you want to name as a continuance to get your benefits after you're gone. We want to know who you want to name as beneficiaries. We're going to need their information, their date of birth, their social security number, their address, so that we're able to contact them. And then while you're retired, we need more information from you. We need to know your bank account. That's very sensitive personal information. But we want to make sure we can pay you, so we need your bank account information. And then eventually, we're going to need more information from your beneficiaries so that we can set them up to receive payments that they're entitled to. So that talks about when we're collecting the information. We also want to talk about when do we get rid of the information. As I just talked about, that is a lot of information we have on each and every one of you, your spouses, your beneficiaries. It's a lot of information, and we also need to talk about when do we destroy that information. So that's all part of that section. And then we want to talk about where do we store that information. We do still have paper files. They're in a secure location. They're not in our offices. We're not using them on a day-to-day basis. Most of our information is electronic. So that's being stored at our offices. It's also on tape backups that get stored off-site so that if we had a disaster, we would still have access to all of that information. And the last thing we want to talk about is who has access. We have a number of employees at SDCERS, but they don't all need access to your information. So we limit who can access your information based on who actually needs that to do their job. So along with that, Susan has taken some other steps to get our data privacy program up and running. In the last couple years, she's updated our internal privacy, confidentiality, and information security procedures. She's updated our privacy policy, and she's updated our social media terms of agreements. So the third promise I wanted to talk to you about is funding the system. So in September of 2018, the SDCERS board adopted a funding objectives policy. And the main focus of that policy is to get all 3 of our plan sponsors to 100% funding. That's our goal. Now, once you get to 100% funding, it's actually really hard to stay right there. So the policy says we're looking at being between 90 and 110% funded. Each of our plan sponsors has their own funding ratio. The City of San Diego is about 71% right now. The Port's about 74%, and the airport's at 89%. So we still have some work to do to get there. How do we know how we're getting there and how we do that? Well, we have 4 objectives that we're looking at in our policy. So the first objective is benefit security. That's making sure the money is in the plan to pay the benefits that we've promised to you. It doesn't mean that we have to have the money for what you're going to do in the future, but for what people have earned as of today, we need that money in the plan. We also look at stable and predictable costs, and this is for both our members and our plan sponsors. While you were working, you were making contributions out of your paycheck. Plan sponsors are making contributions every year. We want to keep those as stable as we can. We don't want big peaks and valleys in what we're charging to our customers. We also want to talk about intergenerational equity. We want to make sure the taxpayers that are receiving services today are paying for those services today, and that they're not paying for services that haven't been rendered yet, that are in the future. We also don't want future taxpayers paying for services that were received today. And the last thing that we look at for our 4 objectives is cost sustainability. We want to make sure that our pension payments that we're asking for our plan sponsors to pay us are sustainable, that they continue to make those full payments in all types of economic cycles. So those are the 4 objectives that we're looking at in our funding promises. How do we know how we're doing on those? So every year, our actuary, Chiron, presents an actuarial evaluation. They look at all the data from the last year, they look at some assumptions, and they come back and tell us, here's your funding ratios, here are the contributions that need to be made next year. There's 2 sets of assumptions that they look at. They look at economic assumptions, and they look at demographic assumptions. The biggest economic assumption is the discount rate. You heard our investments team talking about they made 7% last year, which is fabulous. Our actuary was assuming that they were going to make 6.5%. So our actuary is saying in the discount rate, long term, we need to make 6.5% each year. We know some years we'll make more, we know some years we'll make less, but that's what they're looking for. The other economic assumptions are looking at inflation. So we know that there is wage inflation that happens, and so that's part of their assumptions. They're also looking at merit increases. As you're working through your career, you're going to have step increases, so they're taking that into consideration. And then the final economic assumption they're looking at is the COLA, which we just talked about, which we're hoping will be 2% next year. Then there are demographic assumptions. Those are the assumptions that look at the behavior of you, our members. We look at how old are you when you start working for your plan sponsor? How old are you when you separate service? Do you leave and retire later, or do you wait and leave and retire right away? Do you enter drop? How long do you stay in drop? Do you become disabled? How long do you receive your benefit? And then how long does your continuance receive a benefit? So those are all the demographic assumptions they're looking at. So periodically, we need to go look and see, are those assumptions good? Are we making the right assumptions? So about every 3 years, we do what's called an experience study. The next one will be in the spring of 2020 for the June 30, 2020 valuation. So in that experience study, our actuary is going to look at all of those assumptions, demographic and economic, compare it to what we've been doing. Have we been meeting them, exceeding them, falling short of them? And then they're also looking, are there any significant trends in the future that they can see? And they're going to come back to our board with a recommendation for making adjustments for some of those assumptions. So that will happen with our June 30, 2020 valuation. So that's an update on those promises to you, and I'm going to turn it back over to Cynthia Queen. Thank you.
All right, are you ready? Will SDCERS pay the 13th check this year? Yes. Yes, candy for everyone. Come on, hurry up, candy for everyone. Don't miss out. This is such an excellent audience. Thank you. How long do members typically wait to receive their first pension check? We have an A student over here. 2 weeks? Excellent. Excellent. Can you believe that? It's fantastic. Who's our A student right there? She'll take care of you. Excellent. All right, next question. How many funding objectives does SDCERS have? 4. I'm so proud of you all. Marcel worked so hard on those funding objectives. She gets candy for this, too. Thank you. Thank you so much for, this is just fantastic. So pleased you're all paying such excellent attention. Now, I would like to introduce to you our CEO, Greg Rodemaker.
Thank you, Cynthia. Thank you, Marcel. That just tells me I need to work harder so I can get some candy next year. That's what I'm saying. But thank you so much for coming today. And I thought I would start with 3 little stories about values. So story 1, once upon a time, all the villagers decided they would get together and pray for rain. And the day came when all the villagers got together, but only one person brought an umbrella. That is the person demonstrated the value of faith. Story 2, as youngsters, we have nothing, but still we get married and have children. That's the value of love. Number 3, when you throw babies in the air, they laugh. That's because they know you're going to catch them. Now, my attorney told me, Greg, make sure you mention to say, never throw babies in the air. Toddlers maybe, but never babies. SDCERS uses a set of core values in administering the pension plan. They serve as a guide for us for making decisions and how we should, as SDCERS staff and board, behave. And while it would really be fun to talk about the SDCERS core values all day today and why they're important to you, let's just say that we know that they're customer service, accountability, professionalism, fiduciary, integrity, and transparency. And in summary, we could say that they make up our retirement promise. They guide us as we deliver your retirement promise. And the retirement promise is the heart of our mission statement. And our mission statement really focuses on making sure that we are paying your promise benefit to you on time. And that we focus on ensuring the money that is set aside to pay your benefit is safe, invested properly, and adding value. Our entire SDCERS team is dedicated to your retirement promise. Now, some of you may have heard of a time when we didn't have a retirement promise. There was no retirement security, not for most of us. There were some rich people out there with retirement security, but not all of us. Today, we have about 325 million Americans alive today, grouped into 6 generations. The oldest generation, known as the greatest generation, lived through the Great Depression. They worked together for the greater good to build and define retirement security. And historians correctly recount this effort as being a contentious endeavor with spirited political debates, attacks, and brinkmanship. But when the dust settled, the newly created retirement security paradigm delivered our Social Security system and a wellspring of public and private pension plans across the United States. And of the 137 working Americans today, our public and private pension systems only ensure the retirement security of about 90 million Americans. So regrettably, we are continuing to slip away from retirement security. My grandfathers and grandmothers were part of the greatest generation who raised their families during the Great Depression and often spoke of living within one's means, conservatism, and making sure to take care of others as they were family, security. Now, national reports repeatedly highlight that state and local agencies promised benefits greater than their checkbook balances could pay for, or regularly decide to postpone paying for the benefits that were promised. These agencies have lost sight of conservatism by not living within their means. Some people not having retirement security for themselves call for the abolishment of retirement security. They have lost sight of a secure living standard for their own community. But we are fortunate for the city, the port, and the airport to have created sustainable retirement security for our community, for their workers. Now, they have done so both by using retirement plans, pension plans like SDCERS, and defined contribution plans like a 401k plan, 457, of that nature. But this is not the case for most Americans today. The oldest and the first generation alive today is the greatest generation. That includes people born before 1928. The greatest generation has about 2 million people today. This is a very special group of retirees and beneficiaries that are in our age 90+ club. It's an exclusive group with about 340 retirees and beneficiaries, and actually includes 10 centenarians. And speaking as a quinquagenarian, I'm in awe of these folks and their longevity. Our next generation is the silent generation. That includes people born between 1928 and 1945. The silent generation has about 24 million people today. This group at an age range of about 75 to 90, and nearly all retired from the workforce. The next generation is the baby boomers. That includes people born between 1945 and 1965. We have about 73 million boomers, ranging in age from 55 to 75, and they're a mix of working and retired people. Do we have any boomers in the house? Oh, yeah, yeah. Now, the National Institute on Retirement Security recently studied the boomers' retirement security, and the study found a significant concentration of wealth with the wealthy. The top 25% of the baby boomers have over 90% of the money. So let's say the entire 73 million baby boomers are represented by 12 people. That means the 3 wealthiest baby boomers have nearly all the money, and the other 9 have little else. And in fact, 6 of those remaining 9 have actually nearly nothing saved for retirement. The next generation is Generation X. That includes people born between about 1965 and 1980. There are 65 million people in this generation, ages about 40 to 55. And these are generally working mid to late career. The remaining 2 generations are the millennials and Gen Z. Similar to the boomers, the study found comparable financial wealth concentration with the Gen X and the millennials. But if we look at all the generations, the median retirement savings account balance among people working today was 0. Over half of all working age people do not have any retirement assets set aside. That includes a pension like SDCERS, a defined contribution like a 401k, or an IRA account. So at this point you're going, Greg, thanks, what a depressing presentation. And I know and I apologize, but I really want to make a point that we should really be aware of why we'll continue to see pension envy in our communities. We should be aware why we'll see more angry media articles across the nation. But we should always remember that here in San Diego, we are part of the solution, not part of the problem. We should always be proud for what we worked for what we saved for, and what we currently enjoy. So how is SDCERS part of the solution, and how do we keep our promise? First, we pay the promised benefit to you each and every month. Our plans are well funded. The port and the city plans have between 70–75% of the money needed, and the airport is much better funded, about 89%. And although we're not 100% funded, we're very well funded, and we have the wherewithal to make it through any significant financial market downturns that may happen into the future, to make sure that we can deliver your promised benefit. Second, we have a fund that is a plan that is funded by using both contributions and investment earnings. While both the employees and employers contribute money into SDCERS, to fund retirement benefits, the earnings on the portfolio fund the majority of benefit dollars paid to retirees and their beneficiaries. Now, media articles make it seem like all of the money is coming out of a taxpayer's pocket. That is just not true. Over the past 10 years, the investment portfolio and the employee contributions accounted for over 2/3 of the money coming into SDCERS to pay for pension benefits. Third, we operate effectively and efficiently. Media articles can also make it seem that pension plans are squeezing the life out of state, county, and city budgets. This is not true in San Diego. Over the past 10 years, the City Port and Airport have done a very good job at funding their plans. The City Port and Airport, along with their employees, pay SDCERS contributions on time and in full. SDCERS is less than 10% of the city's budget. About 8 cents of every budget dollar funds pension benefits. In other words, 92 cents of every pension dollar goes to fund and take care of the community in other ways. With this in mind, I went to SDCERS' website, and I pulled up our latest audited financial report, and I noted two things. First, that SDCERS had over $8 billion in assets under management, and two, the administrative and expenses and investment expenses were about $50 million. And using the power of math, I calculated that the administrative fee load is about 6 cents for every $1 million in assets under management. I wish my bank and my IRA were that cost effective. So SDCERS board has done a very, very good job in crafting a sustainable funding plan for our employers that will deliver retirement security for our retirees and their beneficiaries. So at our 2018 annual meeting, we reviewed the litigation between the city and its unions over Proposition B that closed SDCERS to most new employees. Where we left off on the story was the matter had been heard by the California Supreme Court, and they found that the California Court of Appeals had made a bad decision, and they sent the case back down to the California Court of Appeals to address the appropriate remedy. We pick up the story with the Court of Appeals reconsidering its opinion. Now, the court concluded the city should meet with the unions and find a way out of this trouble and make the employees whole. Now, those are not exactly the words from the court. Those are my 20 words that compress a 20-page court order. Importantly, the court did not invalidate Prop B. It said if the unions want to invalidate Prop B, the proper way to file a special lawsuit in Superior Court called a quo warranto lawsuit. Now, the unions asked the California State Attorney General if they could file such a suit. That's the appropriate thing to do. And the California State Attorney General said, yes, go ahead and sue the city. Go ahead and sue the city council to invalidate Prop B. The unions recently filed their quo warranto suit in Superior Court. Now, as the city has agreed to stop fighting with the unions about Prop B and support moving forward with this quo warranto action, it is unknown if other Prop B proponents, those in favor of Prop B, will raise opposition to this lawsuit. We don't know how many years this quo warranto lawsuit will take or when it will be resolved and how long it'll take to be final. Importantly, SDCERS is not a party to this litigation. It's not a party to these legal proceedings. The Court of Appeals decision does not require any immediate action by SDCERS. But SDCERS stands ready to implement whatever the court orders, because that's our promise to you, to deliver benefits accurately and timely and ensure the trust funds safety, integrity, and growth. So looking to the future, how will SDCERS move forward to make sure that we can keep our promise? Well, there are some significant strengths that will help us embrace the future. One is effective board governance. All of our board members, which you had met Ms. Coleman this morning as our vice president, all working together to put the pension trust first and foremost. Two, planned funding getting stronger. We expect short-term up and down in our funding, but a longer funding in the long term, stronger funding. Three, our assets are performing well. Our investment consultants report we are taking investment risk wisely. We have one of the better performing, less risky investment portfolios. Number four, employers making required contributions. SDCERS administers sustainable retirement plans where employers and employees make all the required contributions. Five, strengthening relationships. We collaborate with our stakeholder groups, such as the retiree groups that Ms. Queen mentioned earlier in the presentation, because together we are stronger and successful. And number six, we've got a great SDCERS team. It's with pride that I boast about the SDCERS team. We're focused on being a sustainable, secure retirement system that delivers you your promised benefit on time. So thank you, and I'd like to return this back over to Ms. Queen.
All right. Thank you, Greg. Name one of SDCERS' 6 core values. Integrity. Transparency. Customer service. If anyone here has received great customer service from SDCERS, you get a piece of candy. Excellent. In what generation do our oldest retirees belong? The greatest. The greatest. Excellent. Tibor. Thank you. Is SDCERS a sustainable pension plan? Yes, it is. Excellent. All right, now the grand finale. My job is to help you access and understand your retirement benefits. Each year, you receive several publications via the U.S. mail because we want to ensure that you know the most important information about your retirement account. But of course, our website is an excellent resource. We can use our website to post extensive information about our 20,000 members in 27 different plan tiers who actually live all around the world. Now that's transparency. Now I know that not everyone likes the internet, so I'm going to walk you through the most important resource on our website, which is the member portal. Like many of your banks and credit cards, this provides secure access to your personal retirement account where you can not only view information, but can perform transactions in a completely secure environment. Here, you will register. On this page, you'll see the instructions. For retirees, you will need the net payment of your most recent retirement check, which is available on your bank statement. For the active members who are here, it will be a similar piece from your latest paycheck with the contribution amount. Also, you will need a personal email account to register. Read the privacy policy and agree. Now, you will enter your personal information, enter your full name as it appears in SDCERS records, enter the net amount of your most recent paycheck, and then you will select the plan that you participated in. If you are a police officer, a firefighter, or a lifeguard, you are a safety member, and if you work in an office or have a really cool job out in the field, you are a general member, so select that. Next, you will create your user ID. This is a personal email address that you access regularly, which will be associated with your account. Now, security phrase and image. This is an important security feature where you will select an image and a phrase, such as basketball and net. Now, each time you go to the member portal, you're going to make sure that the image and phrase that you selected shows up. So I will know that when I see a basketball and the word net, I'm on my account and not one of those fake sites. This is why it's a security measure. Again, this is an important security feature because we are on the ball. Now here, you will select 3 security questions. These are, of course, things that you know a common answer to. Then immediately, you will receive an email to the account you registered with. At the top, there is a one-time passcode. You will copy that, follow the instructions there, enter the one-time passcode, and now you will create your own personal password now that we know who you are. So now that you're registered, you have the option to register your computer. If you are at home using one of your personal devices, definitely select yes. Then you can skip the security questions. But if you are on a public computer, such as at our wonderful library, you should select no. Now, you're ready to log in. Simply enter the email address that you registered with. Voila! Hi, Sam. This is Sam the squirrel, our new mascot. Get it? Squirrels squirrel away their nuts for winter, just like a pension system. Thank you. It's fantastic. Sam stars in all of our educational videos. He's looking at all the information you can access on our website here. And I'm going to focus on the most important features for our retirees. Of course, seeing your pension paycheck. So, you can access the payment summary. We will have all of your latest pay stubs there. You just look at the statement you would like to view, click on it, and the statement will download. You can print it if you like, but you can certainly see a summary of all your credits and deductions and your taxes in line-by-line detail. You can also view your beneficiaries. This part is important. At the top section where it says your beneficiaries, you can update or add a beneficiary for your death payment. This is the one-time payment that is received upon your death. Now, if you look below, it says your continuance. Some of you have a continuance and some of you don't. When you went to retire or enter drop, you selected a benefit option, and you had the choice to select, if you wanted to, a continuance to go along with that. That means the person who would receive a continuing benefit, which is a portion of your benefit for the rest of your life. This continuance can never be changed. But it is important that you remember who it is. Remember, your family needs to know who has been designated for what. So please make sure that you're aware of that. You can also view tax documents. You can see the entire listing here. And I would really encourage you to check out all of the features on our member portal. All right, last trivia question. Somebody save me an Almond Joy. Are you ready? What is something you can find on your member portal account? Tax information, paycheck, cute squirrel. Mary, what can you find? Beneficiary information, which is very important. I heard lots of good answers over here. Lots of candy, the squirrel. This gentleman needs 3 pieces of candy. Farnaz, over here. That's the last trivia question. Get your good stuff. Besides the fact that you received a reward, it is very important that you are here today. I thank you for being responsible for and aware of your future retirement benefits. Thank you for paying attention and for playing our games. I would also like to thank City TV for their excellent work here and services in videotaping this event. This afternoon, we will have, they did deserve a shout out. This afternoon, we will have a copy of the PowerPoint posted on our website. And in about a week, as soon as this video is ready, you can see the entire thing and hear all of the dialogue. We thank you so much, and I hope you all have a wonderful day.